Perceive that which cannot be seen with the eye. Miyamoto Musashi. That is what we strive for every day by doing our work with the charts, 10 to 15 minutes, following the stocks and ETFs that we're interested in. Now here we do 4 ETFs along with Bitcoin. That is the S&P 500 by SPY, the NASDAQ 100 via QQQ, 20-year government Treasury bonds, that's here in the U.S. bonds, and gold. We also toss in Bitcoin. So we give you a commodity, we give you a cryptocurrency, we give you bonds, and we give you 2 stock indexes. What we teach here can be applied to any stock or ETF that is chartable. Great training for our subscribers. You subscribe for free at chartingwealth.com and sign up. Every day we have a special training for you today. The secret of maximizing the Monday effect or the weekend effect. What is that all about? It was a study that was done in the 70s and it still works today in many, many cases that, and this is the thought, that what happens on Friday, and as far as the direction goes of the market and many stocks, is the news that comes out affecting those things, affects them on Friday, and then it's digested over the weekend and typically starts the new week off in the same direction. Now again, no guarantee, but there is a high correlation to that. I want you to take that training. If you're a subscriber, it'll be in your show notes. Don't forget the PDFs for our daily market worksheets, weekly market worksheet that you should be filling out now, and the trade worksheets whenever you do a practice trade. Those are all also in the show notes for subscribers. PDFs, you can print those out. We also have a spiral bound version that you can buy. Follow the link in the show notes to support us along with our book. Let's jump into these charts. We see the market ends up for stocks, both the S&P 500 and the Qs, up a little bit. Again, just continue to sort of tick up a little bit, 0.17% for the S&P 500. As we look at the week, we can see that stocks did move up higher, slowly but surely. That price percent oscillator, though, still negative. Derivative oscillator positive, but still losing momentum. We see this divergence where hitting higher highs, but that price percent oscillator and the derivative oscillator won't follow suit. Look at the 2-day chart. Same thing, it just won't cross over. It has been below and just sliding along below this entire time. Derivative oscillator, this is the second 2-day candle with the derivative oscillator gaining upward momentum, but not that price percent oscillator. Now, I am all for a crossover going up. That would give us the opportunity that if this market does start to hammer down, we'd have a 2-day recross and a great reason for jumping in. And we look at how even on the half-day chart, you've not seen anything soaring as far as the price percent oscillator goes. It's up for a while, it's down for a little while, back up for a little while, down, and then back up. I mean, again, you can see this sideways slide edging up, but again, not enough to have our derivative oscillator, when it was negative, to flip over going down. Not enough, again, to have our price percent oscillator pull away strongly from the red signal line. So again, some potential inherent weakness as the market, as it continues to just, refuse to have some good moves one way or the other. Now, this is the summertime trading zone. Maybe we're back to that. You guys know that last summer we weren't. Last summer was a rocket ship. First down in the spring and then up in the summer into the fall. So again, typically that's not what we see in the market. Usually in the marketplace, you just sort of have things sliding along slowly, not a whole lot happening. That was like 2018 again, but when you look at what happened over the course of this last summer with everything going on. You can even see the summertime back in 2019. Again, just not a lot typically going on. Summertime, usually a pretty weak time for the market. Why? Because the volume goes out. Now let's go on to the Qs. That's a lot of people that sell in May and go away, live to trade another day. A lot of the volume goes out. People go on vacation. They sort of put the market on autopilot, but not so last year. Maybe that's what's going to be happening this year, and we'll be back to sort of the normal melees is what we like to call it. What do we see going on with the Qs? Well, 3 weeks of up movement on that weekly chart, but again, not enough energy to have even the price percent oscillator crossover or the derivative oscillator today. We did have that crossover back on this past Monday, the 7th of June, and edging up throughout the course of the week. Price percent oscillator pulling away from the red signal line. Now, if indeed the market does roll over and go down, that, of course, our trigger would be that 2-day recross in the same direction as the down move on the weekly chart. Look at the half day. It's continuing to move up also. Price percent oscillator heading up, derivative oscillator flat for about a day and a half. So that's where we are on stocks. What about bonds? Well, as stocks edged up for the day, bonds down 0.16%. Did have an up week overall for bonds. Price percent oscillator gaining momentum. Price percent oscillator, yes, gaining momentum, pulling away from the red signal line. Derivative oscillator also gaining momentum. Green up candle. We can probably now try, it's just been hard with that sideways slide and all, we can probably try to redraw as best we can a little bit of a trend line. Not a super helpful one there, but we'll go ahead and put that in. And as we leave the weekly and go to the 2-day, you can, of course, see the 2-day popped up quite nicely on that Tuesday, Wednesday candle this week, Thursday, Friday. Also moving up steeper. Price percent oscillator spiking up, derivative oscillator 2 half day. You can see where it crossed over back on the morning of the 4th, Friday the 4th of June, and then just continuing to move up quite nicely. Move it up sideways, up sideways, up sideways, up, and that's fine. Price percent oscillator flattening a little bit, derivative oscillator at the end of the day losing some momentum, but again, we can see over the last day and a half or so, price right there, not at the high it was actually on Thursday afternoon. But again, we did have just a little bit of a down day. These are Heikin Ashi candlesticks, so they're, of course, calculated a little differently. That is where we are when it comes to bonds. Let's go to gold. Now, gold did roll back a fair bit on Friday, 1.13%. We had several weeks, 4 weeks of nice up moves on gold over the last 2 weeks, slipping sideways and down a little bit. You can see where the price percent oscillators lost some momentum, not heading up at the same angle it had in the derivative oscillator. For the first time in several weeks, losing some energy. Ended with a red open box spinning top, slowdown in the up movement. See a longer wick on top, several times the width of the candle itself, a little wick on the bottom, about the width of that small spinning top candle. And again, it's open box, not red. Go to the 2-day. And what do we have on that 2-day? If you look over to the left-hand side of the screen, under that horizontal gray line, you'll see PPO and EAVG. That is the price percent oscillator set at its 10 and 24 settings, and it's at 182. And you see the exponential moving average 8 period at 182. So we don't have a crossover yet. They're just laminated right there. Derivative oscillator did go negative. And again, gold may cross over on that 2-day as we start the week. It has penetrated the weekly trend line. And of course, that's all right. Gold gave us wonderful opportunity, jumping in somewhere around the 166 mark to a high on gold of 178.85. So is that a nice climb for you? From around the 166 to the 178, about 12 bucks over a month. Is that okay? I would say, yeah, that's pretty good. That's pretty good. We were waiting a long time for that. nice to see it. So again, if we do have this crossover going down, then of course that would, if you've continued to stay in and hope, that would be your absolute ringing bell to get out. Now, hopefully you would have captured things when you first started seeing penetration of your trend line, red candle, all sorts of devolution. You may very well have taken your profits back then. I know several of you did. But again, if you've stayed in up to this point, you've not lost a lot, not at all. You're still at about a $10 profit over in your practice trade per share over that 1 month plus period now. However, the ringing bell of get the hell out now, don't stay in absolutely any longer if you have a crossover going down on that 2-day. But again, want to capture your profit before you wait that long. So again, if we have a bounce off, if we have a crossover going down and then a recross going back up, by all means, consider jumping back into gold. We look at how gold went for the day. That's where we see where gold had that big hammer down on Thursday, the 3rd of June, and then up for 2 days, sideways for 2.5 days, and up a little bit on Thursday afternoon, then of course rolling over Friday, but not hitting that prior low. And again, that half-day chart is in a confirmed down move and has been for a while. Derivative oscillator gaining upward momentum too. That's where we are on our 4 big charts. What about Bitcoin? Bitcoin up a little bit for the day, 0.17%. Of course, Bitcoin plumbed lower. It had been hanging around that $36,600 or so mark. And then during the course of this week, plumbed down to a low of $31,808. Now it ended the week at the $37,000 mark. But again, continued down pressure on our price percent oscillator. Derivative oscillator is about flat right now. Look at this 2-day chart. You can see where the price percent oscillator has flattened on that. We ended the week with a green, almost doji, so still lots of indecision, downward pressure, derivative oscillator losing downward momentum. Look at the half-day chart, and of course it did cross over going up on the 10th, and the next, that afternoon on the 10th, Thursday, we saw the derivative oscillator flip over, and of course about the same on Friday, up almost next to nothing for Bitcoin, 0.17%. But again, still lots of downward pressure. No time to be jumping into a practice trade yet on Bitcoin. We'll continue to watch and see how long the cryptocurrency meanders, maybe hitting a bottom, maybe plumbing lower. We'll see. And of course, we'll follow it each and every day. When it does turn around and opportunities abound for you to jump back in on a practice trade, we'll be following it and you'll know. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters. We did send out all of the most recent book orders today, every single one. If you don't have our book, Charting Your Way to Wealth, we have an autographed copy waiting for you. Follow the link in the show notes. Buy it. Support us. Thank you, Patreon members, book buyers. God bless you all. From the whole team at Charting Wealth World Headquarters.